In today's bond markets, we're going to take a look at the 10-year note. The rally continues in the first day of trading here in 2019. We continue to see the 10-year note rallying up 11 out of the last 13 trading days. So once again, we're seeing this movement from equity positions into the bond market, as again the expectations are that global slowing is going to have an impact here on the trajectory of rates moving forward. So we're seeing that play out in the bond market. I can tell you, when you look at the current yield right now in that 10 years, about 2.66. We actually saw it below 2.65 at the 2.649 level. That was the low yield of the day, and then a little bit of moderation here as we saw the equity markets rally back here in the end of the day. Looking at some of the other activity here, the yield curve. Now we did see it actually, that 210 spread, the 2-year, 10-year spread, start to widen in the end of December. We actually saw it get out to 20 basis points, but now we're seeing compress again, currently around the 16.5 basis point level. So we did see that come in quite significantly. And if you look at the longer end of the curve, you go out to the 30s, both pressure on the 10s and the 30s, where we actually saw the 2-year up slightly today. Looking at some of the driving forces here as we move into 2019, the global slowing story continues to be a theme. I think that's going to continue to play out. The partial government shutdown, the tariffs, the Brexit issues, some of the other dynamics that the market's contending with are coming into focus once again as we enter 2019. Also, some significant slowing in the manufacturing center overnight. When you look at what took place in China PMI numbers much weaker than expected. We saw European PMI numbers, purchasing manager index numbers, much lower than expected. So again, playing into that global slowing theme, and once again, also playing into this driving force, I believe, when you see the yields now pushing down when you look at the 10-year to 11-month lows.